Okay, so the thing with Tuesday's webinar, so this cable on my mic is a bit loose, and I don't like it. I don't understand why it's a bit loose since this mic is basically new, and it's a snowball, so I don't know. So whenever like I move the cable a bit, it'll like pretty much disconnect the mic, and so I think I might have moved the mic during the Zoom, and that kind of messed it up. So if my voice changes in terms of like from device to device, or if I just cut off, just let me know, but I'll try to keep an eye out on my OBS. But yeah, we can go to get started. Right, so kind of a, you know, I don't want to say boring, but we did expect, you know, this continuation. So I kind of said this on Tuesday, so I'm pretty sure the recording didn't get this, but the general idea on Monday was, or Tuesday, I'm sorry, was that although we had seen, right, a internal reaction, right, we're still just in a discount to continue higher. And I believe on Tuesday at around 11, yeah, we were around here. So I was anticipating us to continue higher, but the only reason with, you know, necessarily not wanting to play something like this, right, is because we haven't even solidified our range yet. We're still within a premium. We haven't solidified the range. We don't know where the high is because the high is being continuously taken out to create new highs. So evading that, right, we see a bearish reaction, but the bearish reaction signifies, right, not necessarily that, right, we're seeing a signal of reversal, but this is the first time where we've seen, right, because if we're going to know, actually, let me do it with this, right, looking from low into highs, right, obviously internally, let me do this in a different color, right, from low into the high, right, this is the first time we've taken out, right, a legitimate point of solidified point, in that, by that being this represented low. So what this is representing to me isn't necessarily that we are bullish, that we are bearish, I'm sorry. What this is signifying to me was that XPOI was valid, for one, and two, we have now solidified the range, which would have been, right, this high. So because, right, we're seeing that and we're seeing a potential bearish reversal, does that really make sense from an overall perspective here? Does it make sense for me to short here when we have been bullish for pretty much the past almost year? It's about to be a year. But because we've been so bullish since then, it doesn't necessarily make sense for that small continuation BOS to make a judgment the size of, you know, giving a daily reversal. So I'm not necessarily saying for you to buy here, but I'm just saying it doesn't really make sense, right, to sell based on POI, based on structure. It doesn't make sense because, for one, there is no reaction here. Like there's obviously no bearish transition, which leads to bearish continuation. So there's only momentum, right? Then there's momentum. It doesn't really make sense to want to justify anything to the downside. But what I do want to analyze and want to understand is what had happened after the reaction. So the reaction based on the POI that we had pointed out, I believe it was a couple of weeks ago, maybe 2 weeks ago, 3 weeks ago. The POI that we had pretty much pointed out, that gave a significant reaction, which took out an important low from a major intraday stance. So that leading into the continuation BOS that is in harmony with previous momentum. This now is giving me signs of bullish structural disruption. So that generally is making me assume that we will just see some sort of discount. Of course, this has to be supported by your lower time frames. You have to see some type of bullish transition, just something of such to give you obviously that potential completion of the structural disruption. So as of now, on Tuesday, like I said, the audio might have cut off, but the general idea was that we were looking for just continuations to the upside. Not necessarily immediate, but just continuations as a whole. Because like if you guys remember, I did point out a potential turbulence point, which if we were to come back to it, you know, it would make sense that if we had a bullish transition, that would propel us, right, pretty much into the targets that we are targeting, meaning green line, meaning both X's. Because as of now, it really looks like we are probably going to reach there within the next 2 to 3 months. Especially if we're looking at our quarter closures, which this closes, well, obviously this just opened, right? But last quarter was very, very bullish. So who's to say we aren't seeing a bullish rest of the year, right? And that's also being supported particularly by EURUSD. EURUSD, we had our bias set out from last week, right? We are pretty much made the judgment that because from a swing perspective, we had liquidity be taken. Which led us into the continuation BOS that is in harmony with our previous direction. So with that being said, right, we know that we are technically bearish. So once we see the bearish development or the bullish development short term, right, we know that any break here is going to signal us that we should at least be targeting our green line. Excuse me. So a week, 2 weeks ago, I believe it was like a week ago, we were actually trying to anticipate to see if we could see any type of discount or any type of premium, I'm sorry. And the reason why that could or could not work, well, one, it could work because you're mitigating something in X region, right? And it also couldn't work because let's just say this was the low and then that is now solidified. So we could have high wherever the high is into low, into retracement, unwillingness internally, and that could signal our potential sign of reversal. So I'm kind of glad that we only got continuations up until then, but I also don't like that because I don't really like to play those continuations, just, you know, those quick intraday moves, because after you reach, you know, your green line, which is your target, it's a bit hard to judge what direction you're going to take. And I'm honestly on the same boat here because, for example, we had the potential bearish structural disruption and we have now taken out a major daily low here. So we've taken out liquidity, and we know that after we've taken out liquidity, there's a good chance that we could see a sign of reversal. We've seen that plenty of times before. And that could be just the sign of a pullback, right? Or it could also be the sign of a potential future liquidity grab, but I don't ever want to assume that. So judging just based on what has happened after, right, our move has been given and we have a potential structural disruption, right? Obviously, my main key point of interest is in here. So as of now, we are flagging up. So what I'm looking for in the next week is obviously the continuation. We've already seen the effort of wanting to go higher, right? But that failed, and that failed with momentum. So it's really giving away a sign of potential continuation with the bearishness. But the only thing locking that up is the fact that we have just taken out a major point of liquidity. And that's pretty much what I'm worried about. So we know that the instant continuation is there, but who's to say after we've taken out liquidity, right? You can't anticipate that too. So how do you play that? If that may be your question, well, that's where transitions come into play, and that's where you're trying to find those conservative entries, etc., etc. But yeah, with EU, it's been pretty much continuations. It's been a bit sloppy. Personally, I haven't been a fan of how this has been moving just because of the overall character that it's showing. But right, it may just be one of those weeks, because if you're looking at our weekly as well, it looks like we're going to probably continue lower. Just based on looking at that, it looks like we could probably at least start coming down to 1.7. But all of that is going to depend on obviously that intraday sense and whether we're going to get the continuation transition or if we're going to get the reversal transition within that area we just noted. Next would be AU. So this one's also a bit interesting, and I really want to favor that bearish side, mainly because of this. What does that represent? That represents, to me, least importantly, it represents this, which is probably a 2-3 week inefficiency fill. Yep, 2 week inefficiency fill. That led to obviously what we had originally wanted with DXY here. Actually, it wasn't there, it was here, I'm sorry. It was here with the potential failed flag, but the only difference is, I don't recall if I mentioned this on last Friday, but the idea was because this had taken out liquidity to the downside before the upside, that led to the continuation. Whereas the difference here, right, the liquidity was taken out to the high, then to the low, and that's more so relative to a potential failed flag pattern. So yeah, we wanted a bit deeper, but unfortunately, once our range was solidified, right, this immediately continued lower. And there were actually some nice intraday moves here, I believe, during Asia session, during early London, and that was around here. Yeah, you can see this is late Asia, and this would be your London sesh, with this being also the beginning of Asia right here. So there was some type of move there. It's just, I don't want to play those continuations. I want those longer term trades, so I don't have to necessarily scale too much into my position, right? So I'd rather get these deeper retracements for the deeper moves, right? But it's obviously also okay if you're taking these intradays and you're obviously aiming for intraday targets. But yeah, the bias was right here. I know we didn't touch this for like a good week, not a good week, a good 2-3 weeks, mainly because we were just finding those, or maybe we were just getting those bullish continuations. But once we finally got some sort of transition in play, meaning here the failed flag, which is representative of a liquidity grab here, right? This is where we particularly want to start to scale into those longer term positions, because this is a very big move. This move took just about 13 days, about 2 weeks to form, and for it to actually show its hand, it was about 3 weeks, 4 weeks, a month-ish. But yeah, so now, right, this looks very bearish, and if we're looking at our weekly, it looks very bearish as well. It just doesn't seem like we're going to get, any type of deep retracement. So as of now, right, it really is still looking bearish to me. I'm sorry, because let's look at this also from a raw perspective of structure. I'm seeing low into high, right? High is then solidified here, right? So this is now unwillingness, right? So technically, because this is broken, this is our invalidation for the overall bearish sense. So because obviously internally, let me delete this. This is my solidified high. This is my solidified low because we took out structure. But internally, and we can do a different color, I know that there is obviously the continuations here. So once we saw this, right, isn't a sign of bullishness. It's just a sign that we have solidified, right, our high into our low. So that's why this type of premium, really seems super beneficial as to why we should continue lower. So all of this could literally just be seen as liquidity to gain fuel to propel us. Actually, let me do a different color. To propel us further. And that's mainly what makes sense to me. That's just what makes sense to me because of the whole solidified rule concept, where you have technically unwillingness based on solidified point, right? And obviously we know there's internal trends. So this is the first time that's broken. That just solidifies this high to this low. So this is the way that I'm seeing it for now. And that's giving me more of that bearish narrative play. And all of that could have literally been 100% invalidated if this weekly candle here didn't close below here. Not saying that the closure means anything, but the closure signifies a quick reaction from one direction into the other. So if this would have closed maybe up here, now we're talking a different story because the reaction isn't as momentum full, if that makes sense, isn't full of momentum. But yeah, it would have signified that there really isn't too much effort bringing this lower. So there could be signs of potential bullishness, right? But it's because we saw this quick momentum, then we saw the continuation, that immediately changes the bias. Or that immediately solidifies that bearish bias, because that would obviously fall into structure in here too, and that would make this an overall liquidity grab, and that would just be the continuation. But yeah, not much to talk about this week. Our direction has been right, but the price itself has been a bit choppy. So yeah, hopefully that cleans up over the next 2-3 weeks and we start seeing some nice impulses, whether that be bullish or bearish. But as of now, yeah, this is looking super bearish. Super bearish. But yeah, this would have been cool. It would have been cool back in 2020. If we would have pretty much had that whole solidified point theory, fully grasped, because that would have pretty much given us the narrative that we should have been selling since that broke, which we kind of have, but it was a bit more late. But yeah, with that being said, let's see if anybody has any studies today. I know we got some new people. But let's see if we have some studies from anybody. I can show you something. Yeah, go for it. Yeah, I got time today for sure. It's been 18 minutes in. Screen share. Yeah, I got you.
Can you hear me?
Yeah.
Yeah, so I haven't been on here. I haven't caught on to your lives in a little minute, but really I've just been sticking to my two peers, EUGU, but I think you broke this down last week where we had this study where you hear EU, so maybe it's just a quick little refresher, but I just pretty much had this high, created a low, this break eliminate structure, solidify your range. This is all just internal. And then pretty much when price got back up into here, honestly, because the stop loss was so small, and I know this is not the best thing to do, when price came into this wick, I had something marked out. Honestly, I could have just entered with reduced risks and put my stop right there for validation, but you're trying to pretty much, I don't know why I did that, you're pretty much trying to catch this move conservatively. Well, we had this internal high-low, wick break of structure, and then basically we're waiting for a solidified range. So we had this break right here. This would solidify this range. You draw your fib out into premium, wait for premium. So we had kind of like you were talking about with PAU, all of the internal points, so all of these points serve as liquidity for banks, kind of give fuel to to the move, and then we did an LG of this here. Like I said, I know that you probably went over this last weekend or last week, but liquidity graph of this wick right here, and I believe it was like M10. There was a M9 or something like that I found out, which was something that was unmitigated. So I caught this move here, which was, so after we got the reaction, instantly I'm going to lower time frames. And honestly, let me let this develop really quick. So pretty much, basically, this would have been seen as disruption right here. We got the reaction, unwillingness, disruption, and then so now range is high, low, internal trend breaks, solidifies this is the high, draw your fib, pull back into premium, and this is where I have my entry, my validation is right here, obviously back that spread. So that was really one continuation move I caught on EU, and then I caught another move actually, which happened this week, which was same exact scenario. So we had, let me delete this again. So this high created a new low, and so pretty much up until this point, we're pretty much trying to figure out what our range is, because right now, I feel like a lot of people's mistakes is once the price makes a new low, they instantly put a dot or whatever there and they try and sell into premium, but you don't know the range. So pretty much price takes liquidity, and then it takes this lower high to lower low break of this structure here, which now solidifies this as a range, which now serves this as, all these points can be served as internal liquidity points for banks to come and take. But you get the gist of all these points here: internal liquidity, all these points, internal liquidity. And so pretty much, I was just pretty much waiting to see how price was going to react, if it was going to give an LG to one of these internal liquidity points. I believe I had this one marked off. I got break even here, actually. This price came back up, pretty sure lower time frame confirmation. I got something a little aggressive, which was this break. I actually missed this. So we had this low and too high. We had this right here, unwillingness, break of structure. And then I just pretty much took this wick and my invalidation here. I missed that actually, but then I caught something along the lines right here. It was a late entry. But the main entry that I wanted to talk about was after we took all these internal liquidity points, time of day. I want to reference time of day as well. So really, I would not have been really looking at the market during this time. This is Asian session, I believe. So this wick right here, not that wick, but I had this as a point of reference. So I know that, like you said, that you want to catch a bearish transition on a bullish pullback of a bearish trend. That's going to yield you those high risk to rewards, those high probability setups. And so once all of these internal points are getting taken out, we have imbalance left here, which you could play the 50%, wait for the reaction, or you can play the fill. And that's exactly what price did, is price gave us that fill perfectly. And then you go down to the 1 minute time frame. And then we even had this low into this high. This is kind of being a little bit aggressive because I know some people would have used this here, but this break of this solidifies this as a high. Price pulls back into premium, which you don't even need to draw the fib tool for. And then I deleted my position, but I took position here, validation here, which you guys can see in the chat that I posted earlier this week. And
yeah, so let me show you something else here. So let me show you what so yours was obviously the aggressive entry, right? And that is supported by 1 POI, 2 momentum, but it is still I don't want to say high risk, I just want to say aggressive. But where it would have made a lot of sense, right, from a model perspective, right, we're seeing the continuation order flow there, right? Obviously, we've just taken out X liquidity, whatever, right? But here we have order flow disruption, right? Order flow disruption shows unwillingness from an order flow perspective to want you to go in the original direction, which is up, right? And all we see here, what is this right here? Actually, that was ugly. What is this here? It's a pause, right? So that would be, realistically, this is probably what, like a M5, M6 inefficiency fill right there. So that probably would have been your high probable scenario based on order flow disruption. Maybe M3. Yeah, maybe M2. Yeah. Try M2. Yeah, so right here. So you see, so it would probably be in between 3, 4, and 5. But I've recognized it to just be essentially a pause before we then lead into the structure break, which is here. And this shows a pause, which would be technically following the rules of a turbulence point, and that's where you can take your scenario. And that would be more so model based, not necessarily just pushing continuation BOS and being super aggressive. But yeah, please continue.
I am recognizing that this one was a bit aggressive, and how if I would have not took that, I would have just basically waited for the break of this structure here. Waited for the break of this structure here, and then this kind of solidifies this scalp range here. So this is how I would have looked at it. So I would have looked at it, took this, this took liquidity, it broke this preliminary structure, you drop your fib tool, and then we had obviously the inefficiency right here, and your invalidation could have been up here, or your invalidation could have been up here, because I mean, we still had this unmitigated, and this was a candle that took out liquidity. But again, if you do go to the M3, 4, 5, 6, well, it really wouldn't make no sense for a price to reach all the way up there, since this is all efficient, it's all mitigated. So again, I just wanted to stick towards continuations of the external range. So that's kind of just how I played EU, and that's just obviously aiming for this low right down here. And obviously that got melted. And now, so where I'm at with EU now is, if I go and zoom out to the daily time frame, obviously I have my daily external lower high, lower low retracement, which is a 16-hour, 12-hour, 50% efficiency fill and premium. We created this new low, so I'm kind of zooming out now, and I see this. So I'm recognizing this major push here, this high, this low to high retracement, unwillingness. And because this point didn't create a new high, I'm seeing this as the liquidity that banks need to drive price. So we can maybe get a reaction, maybe an LG or something like that, potentially the reversal of price, obviously with proper confirmations. But I see price coming down here and taking this liquidity, and yet that is a mitigation. We can mitigate something in this wick, or a lot of the times I feel like this is kind of what Tomas speaking about, this point that fails to create that unwillingness, price will give you a liquidity grab of that area, and this whole entire POI would still be valid, which you just noted. So referencing the whole entire POI, this point could just give you a liquidity grab, and then we can potentially start the reversal for Q3, Q2, the rest of Q2, Q3, so on and so forth. So
yeah, but you can't assume that though.
Right.
You can't assume that.
Can't assume that, right.
Yeah, just being real, like zoom out on this. Yeah, like zoom out of this. Because realistically, if we're really just looking for continuations, what sticks out? Continuation BOS. Right, and we're seeing and then we're seeing this. Okay, hold on. wrong one. And this is beginning to compress. So you guys know I don't teach this as being liquidity. I don't see that as being liquidity. I think that's super subjective. But this really looks like you can start seeing an impulse just like that come lower.
Yeah, no, that makes,
and that would, yeah,
that makes sense because, like you said, this is impulse, continuation POS. We mitigated something here,
and we have a better liquidity.
I guess this was an unwillingness, but then it would have been unwillingness here. We mitigated something here, and now we're kicking in with momentum, structure, and everything is aligning. So, yeah, can't really assume anything, like you said.
No, but yeah, it just sucks because we were bullish for so long on this, with reason, obviously. But if we really would have paid attention, we would have been bearish, and we would have probably maybe even been looking for bearish scenarios there.
My bad. Where at?
No, you're good. You're good. Right here. Because these are your mega swings. Because, for example, we had the swing. Well, I don't know if you were here back when we were reviewing this, but we caught a lot of us caught the swing from here all the way up to probably around here-ish. And then once we started converting into more bearish sense was over here, but that was after the break of structure. But in reality, it's just been the mitigation.
Right. And see, the only thing that makes me think kind of that we could take this liquidity and go the opposite way is we do have this liquidity grab that's here that created that impulse with momentum, and then kind of looking at DXY, it's just like I can see it take this high right here, but
what if it mitigates it,
Right. No, I can see it take this liquidity here, but it respects still this, because I'm more so looking at this as this is super long term external structure, and then we have price coming into a premium, which it filled 50% of this imbalance here. This is where we get this rejection, which is where we break structure. I know that this was seen as a continuation break of structure if you're referencing this, but me referencing kind of this external structure from the monthly, which is the weekly's parent, I can see this as now we're in alignment potentially with this narrative, and then this unwillingness is just a liquidity point for us to wick above, and we can potentially shift down, mitigate. So that was that. And then another last one, I'm sorry to take up you guys' time, is I referenced this actually about 3 weeks ago, and this was basically NZDUSD. I know a lot of people don't trade this, but I mean, I've seen the potential of this, and I actually missed an entry, but pretty much externally we were bearish leg, continuation pullback, bearish leg, and this break of structure here just was a continuation BOS. So that finally gave us our solidified point of this range here, and then we're in a premium. Obviously, we're seeing price start to compress, start to slow down, and I reference this POI here, which you can actually see on the 3-day as well. You can reference the whole entire POI, which is actually a weekly. Well, it was a weekly inefficiency fill initially before this liquidity grab. And so now that's just something I'm paying attention to. If you guys do want to pay attention, because I do see the potential. So now from like a major intraday standpoint, I'm kind of waiting for a range to be like a solidified range that's clear to me, where we could get some type of bullishness for a little bit and then continue to go lower. And obviously that plays with NU and AU kind of move in the same direction basically, and this would be serving as your long-term target, which we could hit some point in Q2, Q3, and smash that. So, and this was already order flow disruption right here. So we have this POI breakthrough. So
bearish narrative, of course, yeah.
So yeah, those are my studies. And
cool one.
Here we go. I'll stop this shit.
Cool. Does anybody have anything they want to talk about? Any questions? Cool. If not, I do have a question. You're a what? Yeah, I know you're new, bro. Don't worry. Don't worry. I know you're new, bro. No, yeah. Cool. So I guess we can just talk about a quick little topic that I want to bring up. Okay. So, okay. And this will pretty much bring me. So I really want to start growing this for the, I mean, I know a lot of you probably don't follow this, but I've been, we haven't really posted on this. This is where we posted all the, all the old webinars from, everything that pretty much isn't on the website is on here. And we haven't posted anything, and it's about to be at 5,000 subs. So me and Sergio want to pursue this, but I don't want to pursue this in a way that can negatively impact you guys, right? So I'm kind of like in the process of coming up with ways to make content that won't necessarily, like, obviously I'm not going to be teaching the smaller time frame, the structural disruptions, order flow disruptions, solidified points. Obviously none of that's going to be shown on YouTube. But if you guys have any ideas on, or just any way for me to balance not doing you guys wrong while also trying to make, content for the public, I'm always open ears. And yeah, hopefully I didn't chop that up too much. I know I stuttered a bit there. But yeah, long story short, I want to start adding videos on here, and maybe they could even be helpful for you guys. Like, for example, I know a couple of lectures are very helpful for some people. Just because they are just bits of clarity. So yeah, if you guys don't mind, I do plan on pursuing this over the next couple months and seeing if we can maybe even get this to 10K. So yeah, I just see some sort of, some good potential here especially for the brand. So I just wanted to let you guys know that, see if you guys had any opinions, thoughts on that stuff. But yeah, does anybody have any comments on that? I guess not. But yeah, if you guys have no more comments, questions, concerns, yeah, and for the people watching this while it's recorded, definitely if you have any comments on that, please let me know. But yeah, I guess with that being said, we'll just follow up on Tuesday. And this time I'll make sure that my mic is good, all right?